boys, I'm going to be teaching you the most important trading concept you guys need to know, fair value gaps. As you can see by this image, fair value gaps are basically a gap in market price, where basically what price wants to do is return to this gap and fill it before continuing in the momentum where it was already going. As you can see in this example, for a fair value gap to be valid, there has to be some sort of gap between the wicks with this huge momentum candle that's created. As you can see here, there is barely a gap between these wicks, so this fair value gap is not big enough to be considered a valid fair value gap. Let me show you guys an in-chart example. So guys, looking at this chart, I see a perfect example of how we use our fair value gap setup. As you can see here, there is a sizable gap between these two candles and a huge momentum candle was created. This is valid enough to be considered a fair value gap. So all we have to do was wait for the retracements in candles, which go exactly to the top of the fair value gap. And then all we have to do is wait for market structure to stop consolidating right here and break out of this little area of value and print this huge bearish engulfing in order to get in for our sell position. Alright guys, now let's put our sell position in, hold it to the next zone, and see how this trade would have played out.
Order filled.
Boom, just like that, 1 to 4 cash. Peace out guys, make sure to drop a like and a follow if y'all learned something.